Join me as I dive deep into the numbers and take on the challenge of figuring out if CGC stock is really a good investment. If you're considering adding CGC stock to your portfolio, you're probably wondering if it's a smart move. CGC, or Canopy Growth Corporation, is one of the biggest players in the cannabis industry, but that doesn't automatically make it a good investment. The cannabis sector has been on a wild ride, with plenty of ups and downs. The industry is still dealing with some major challenges, like changing regulations and oversupply issues. These problems can affect CGC stock performance, making it crucial to take a closer look at the company's financial health and recent developments. Regulatory uncertainty is a big concern, as laws and rules around cannabis are still evolving. This uncertainty can impact CGC's ability to operate efficiently and turn a profit. Oversupply is another issue, with many cannabis producers struggling to sell their products. This glut can lead to lower prices and reduced revenue for companies like CGC. To make things worse, the industry is also facing increased competition. As more companies enter the market, CGC has to fight harder for its share of the pie. This competition can drive down prices and make it tougher for CGC to stand out. So, what does this mean for CGC's stock performance? We need to dig deeper into the company's financials and recent news to get a better picture. Let's take a look at CGC's financial health. The company has made some significant strides in recent years, including expanding its operations and increasing its revenue. However, it's also faced some challenges, like higher costs and lower profit margins. Recent developments have been mixed, with some positive announcements and some negative surprises. Market trends are also worth watching, as they can impact CGC's stock performance. The cannabis industry is still growing, but at a slower pace than in the past. This slowdown can affect CGC's revenue and profitability. Expert opinions are divided, with some analysts bullish on CGC's prospects and others more cautious. Some experts point to CGC's strong brand and market position as reasons to invest, while others worry about the company's high costs and competitive pressures. So, what can we conclude from all this? The key findings suggest that CGC stock is a complex investment opportunity. On the one hand, the company has a strong brand and a solid position in the market. On the other hand, it faces significant challenges, from regulatory uncertainty to oversupply and competition. If you're thinking of investing in CGC stock, it's essential to weigh these factors carefully and consider your own investment goals and risk tolerance. In recap, we've covered the main points on CGC stock, from the challenges facing the cannabis industry to CGC's financial health and market trends. The decision to invest in CGC stock depends on your own research and investment strategy. We'd love to hear your thoughts on CGC stock in the comments. If you're interested in more investment insights and analysis, consider subscribing for more content. We'll dive into more stocks, trends, and market news to help you make informed investment decisions.